Hello there, I'm Ticky Fullerton. Welcome to our special post-budget episode of Ticky. Coming up, the budget wash-up. MYOB Chief and BCA board member Tim Reed joins us for his take on how business, big and small, should see the budget. And what about the breaking news around an MYOB takeover? Fiscal guru Chris Richardson says a huge story is on the $28 billion in savings made by the government since MYEFO. How have they done it? You might be surprised. And Leo Shanahan talks to AI Group Chief Executive Ines Willox down in Canberra. Are the government's tax carrots to mums, dad and businesses enough to kickstart the economy? Plus, we'll get all the gossip from Budget Day and night with Margin Call's Will Glasgow, who was stalking around a few parliamentary house parties. The day after the budget, look, a sense of relief for all who endured the lockup, I can tell you, and 24 hours more of perspective on the government's strategy, assuming they win the election next month, of course, which is quite an assumption, even after the cash splash pitched at the low and middle income earners and small business. Tomorrow night comes Bill Shorten's reply, where he's expected to match the cash splash and do more at the lower income end. And where Josh Frydenberg's message was, well, trust us. We're the only mob that can be a safe pair of hands in these troubled times of falling property markets and international risks aplenty. That'll be that side. Bill Shorten will be, trust us, we're the real deal, prepared to serve you up painful but crucial reforms, negative gearing, climate change that the nation needs to face up to for a better future, and with more on education and health. Well, on May the 11th, the 18th or even the 25th, Australia will decide. But as the Australian's Paul Kelly told us last night, Josh Frydenberg has missed his chance to bring down a surplus.
He did the wrong thing. He should have had a surplus this year. We've got a narrow, wafer-thin deficit for this year, the year 2018-19, the year that's just finishing, and the surplus, of course, is in the coming year, 1920. I believe very much that for political reasons, he should have had the surplus this year, so he could then say, we're not just budgeting for a surplus, we are in surplus. He didn't do it. I think he should have.
No, I think he's got a very good point there, Paul Kelly. But what has business got out of the budget? Well, big business. The Treasurer today was reminding everyone of the free trade deals. There's no new bank levy, I suppose, but big spending on regulators to keep the pressure up. The big skills package of $525 million for 80,000 apprentices seems to be largely rebadged funds as you dig deeper. And as businessman Mark Carnegie told me last night, there was no sign of Innovation Australia re-emerging.
I would really like stability around the R&D tax concession, and I would like more support there. That's a program that just got going. The world looks to that as being a really, really important reason to come and do business in Australia. And we've still got this thing where it got the legs cut out from underneath it last year. I feel like more could be done on that area. You know, I know it was Malcolm Turnbull, the now departed Prime Minister, that created an innovation agenda. That seems to be sadly discarded, which I think is a terrible thing for the society. And then general business stuff, you know, it was more of the same in my view.
Look, that was a really interesting interview. Mark Carnegie, he wasn't at all convinced on the growth front either.
Thinking they're going to get 3% GDP growth at the same time as you cut immigration, well, you know, I'd love to have, you know, some of what they're smoking where they come up with those numbers.
The Treasurer's election budget focused on small business, though. Why? Because there are no votes in big business and heaps of votes in small business.
People running a small business put their livelihoods on the line. They start early and they finish late. They manage the front office and the back office. They pay their workers first and take their own wages last. We want small business to prosper, and we are backing them to do so. Allowing a cafe to get a new fridge or grill, a plumber to buy new tools, or a courier to buy a new van.
You can expect a lot more of that during the campaign. None of this, though, deals with one of the big problems facing small business at the moment, and that is that it's getting harder for small business to borrow. The credit squeeze is real. OK, well, we'll come to small business and what small business makes of the budget a little bit later. First, we've had a lot of industry reaction to last night's budget. Your Money's chief business reporter Leo Shanahan spent the night down there, was on the ground in Canberra this morning to get across it all. Leo joins me at the desk. Leo, we actually had a surprise backflip after the budget.
Yeah, I mean, if you think you had a hard night last night or a tough morning, because it has been a long 24 hours, it's always like that at budget. Look, spare a thought for Paul Fletcher, the minister who was responsible for unveiling the government's backflip on the New Start allowance, who will be recipients. These New Start allowance recipients will also be able to get this extra payment of $75 and $120 to help out with electricity prices. So it's pretty extraordinary. $80 million backflip the morning after the budget. Just take a look at his discussion with our colleague Tom Connell this morning.
The reality is energy costs are affecting a wide group of people.
So is it going to people on New Start as well?
Yes, it is.
Was that included specifically in the budget?
It's included in the bill that's been introduced this morning. So the
bill, but was it in the budget papers?
And it's passed the House of Representatives, I might say. Now it goes to the Senate.
Now look, that was an extraordinary backflip because neither the government nor the opposition are interested in doing anything much with New Start, and it's a real lift-a-leaner type argument, I think. But they also carved out New Start recipients from receiving this one-off payment, didn't they?
Yeah, and look, the government hasn't gotten soft overnight. There are, of course, very good equitable arguments as to why they should be included in this. It's because they hadn't done the numbers in Parliament. What they realised is that Labor would object to not including New Start, as with the Greens, and they didn't, because they want to get this through Parliament prior to the election. They would need to include it in order to actually get the legislation through, to actually get these payments out to people. So it's a bit of a classic example at the moment of the government not thinking through the implications of not having actually control of the House.
So the flagship tax package, do we think it was stimulatory?
Yes, well, I mean, not to repeat ourselves too much, but yes, the economists we spoke to, last night and today were generally supportive of the of how that stimulus was done. Warren Hogan, Shane Oliver, Joe Masters. So all those people were quite supportive of it. What they did doubt was the extent of that stimulus, whether it would be enough to stave off an interest rate cut and indeed a broader downturn in the Australian economy. But yes, generally good. Of course, the extension of the write-off for small business, largely applauded by business. I spoke to Innes Wilcox. We'll see that interview a bit later, but he was very supportive of that. Infrastructure and the Skills Fund. But look, as Mark Carnegie was saying, look, concern over these cuts to the research and development. Look, that's about $4 billion worth in cuts to that program.
And really nothing there.
Well, what I understand the reason for that was there was a lot of gouging of this program, and that was the argument. And they also cut off the availability to big companies. So there was the likes of Google pulling down the R&D credit, and they themselves were saying, look, we shouldn't get the R&D credit in Australia.
Sounds like the baby's been thrown out with the bathwater.
Look, immigration, another one, which is really interesting, I think. Once again, Mark Carnegie mentioned it, Innes Wilcox mentioned it. How are they going to get this growth in terms of GDP and expenditure if they want to cut immigration at the same time? And where are they going to get the workers for these infrastructure projects? They're already at capacity. I mean, you go out there and there's a lot of those workers out there in the street who are putting together the Sydney tram line are from South America, for instance. These are immigrant workers who are doing this job. And the skills deficit, generally, I mean, it ends up hurting the economy, and a lot of businesses are making that point.
All right, Leo, what are we to expect from Bill Shorten, do you think, in his reply tomorrow night?
I think interesting, the language from Bill Shorten today was, no matter who gets elected, you're going to get that tax cut. So there's not going to be an attempt to better the tax cut, they've already said, well, we already did that last year, so we don't actually have to meet your bet. We've done that, so we'll stick by our policy, thank you very much. There will be more sweeteners in it, though, obviously, looking at the state of the treasuries.
Yeah, Leo Shanahan, be very interesting. We will all be watching that one. Thanks very much. Well, let's now get the views of Australia's leading budget economist, Chris Richardson, a partner at Deloitte Access Economics. Chris, very nice to see you there. I know I saw you down at the lockup, and you've been focused on this 24/7. I was really interested in your latest thoughts around this extraordinary $28 billion in savings, which has basically delivered the government such a change.
Yeah, if you step back and look at the big parts of the budget, there's extra tax cuts, there's extra spending, infrastructure, you know, a fancy way of saying money for marginals in the bush, and there's a better surplus. And yet, Treasury at the same time is saying this slowdown in housing markets, falling housing prices are going to take some of the life out of the economy. And national income, it says, will be smaller in the next few years than it was estimating just a handful of months ago in the last budget update ahead of Christmas. So more tax cuts, more spending, better surpluses despite a smaller economy. How do you get all those elements to gel? Answer. Treasury and Finance have said the trajectory of spending in the federal budget has been overstated. They've substantially cut back how much dollars will be heading out of Canberra over the next handful of years. It was that, and we're talking dollars, for example, rather bigger than handed back by way of tax cuts. It was that that was the secret sauce that held the entire budget and the budget strategy together.
With the Finance Minister, Matthias Cormann, last night on this very subject, and I said, look, it's come down to your changing of the parameters. He said, we haven't changed the parameters, I suppose, fair point, but it has changed, and things like the number of jobs and less spending on welfare.
Yeah, and look, again, if you stand back, it's not just an Australian story. All over the world, growth in economies is showing up more in profits and in jobs and less in wages. And when governments raise taxes, that kind of roughly evens out. But when they spend money, those changes in the shape of the Australian economy, the global economy, gives them savings. So think of that. When we say slower wages growth, you also get, therefore, slower inflation. That means the pace of all those programs that are indexed to wages and prices, that's lower. Lower inflation means lower interest rates. So, you know, we've got $360 billion of net debt. You can make some savings on the cost of that. Jobs, as you note, we're getting many older Australians into jobs. Students are getting more hours of work as well. That combination is making savings. And as wage growth is slower, that means less consumer spending, and that actually saves on grants to the state by way of GST revenues. So
there was a bit of an argument, though, as to whether $28 billion was a credible number. Do you think it's a credible number? And how will this change, you know, costings going forward?
Look, it's hard to judge because Treasury and all economists around the world are playing catch-up to this changing shape of economies. So there is a chance that it could be even more than that. But you look ahead, because we know the numbers, they give us the Treasury and Finance view going out a decade for where those federal payments will go. And they're saying that a decade from now, the share of national income going out by way of federal payments will be about 1.3% of GDP. At that time, you're talking $40 billion a year, lower, and a lot of it coming off the back of these trends.
OK. The other thing that the Treasurer was very proud of, in addition to his surplus next year, hasn't done it yet, is that he's going to eliminate debt, or that's the aim anyway, by 2030. Now, once again, how credible do you think this is? And would it, for example, include, say, a writing down of any of the big off-budget financings, a writing down of the NBN, for example? And that would presumably, if it had to go back on budget, would affect the budget and the budget's capacity to pay down the debt, wouldn't it?
Yeah, or in other words, you're saying what could go wrong if a whole bunch of things go right. Yes, you know, Australia having just spent a bit over a decade running up debt, at the end of the coming decade would have run it back down. But you do need a bunch of things to go right. You need China to go right globally. You need housing to go right within Australia. You need all those off-budget things. It's not just NBN, it's all those loans to students and the like. You need them to be being repaid. You need the underlying pace of growth in the Australian economy, which consists of two things: people power, and you're noting that immigration question, but also how effective, how productive are those people? Will productivity growth actually match, as Treasury says, that 30-year average? That's a daisy chain of what-ifs, and there's a lot of risk in that.
Chris, I wanted to ask you about a couple of sort of Labor's ideas, because, I mean, there's a good chance that they will be in government. Now, a living wage, what would that do to a budget?
Not heaps. You can think of it in a grand sense as, you know, rather than using the welfare system, if you think some people need to be better off getting the industrial relations system to do it, you know, it's the old other people's money. It's not the worst idea in the world. The evidence increasingly, but mostly out of the US, is that you don't lose that many jobs when you force up wages for some people, so they benefit and you don't lose that many jobs. But two things would happen: lower profits, and the biggest thing would be higher prices. So everybody's living standard would be slightly lower to benefit a particular group. Again, not the worst idea in the world, not the best idea in the world. Don't forget that most people on minimum wages, you know, they're spread completely through Australian society. There's many of them in high-income households, just as many as there are in low-income households.
The other big policy, of course, is the Climate Change Action Plan. Now, that has not been, we haven't seen any real costings from Labor on that. Now, presumably, some of their assumptions have got to go pretty well, once again, for it not to make quite a hole in the budget, you'd think.
Look, there are some risks there for sure, but we don't know yet because we haven't seen that detail, and it will be important. And it's the catch-22, of course. You know, global warming is a global problem. The nations that you know, pitch in and try to help, one way or another, it does come at a cost to them. Doesn't mean that Australia shouldn't do it, but yeah, we'll need to see the detail there.
Yeah. Now, we had that little mini backflip on New Start and whether it got included in the 75-125, but actually there was no change. I know you've been calling for it, along with people like Jennifer Westacott. No change to an increase in New Start, notwithstanding the fact that it wouldn't cost very much. Why do you think it is? Is it just is it philosophical, the lift-a-lena thing?
Well, you know, that little thing where basically people on welfare got help with their energy bills. Everyone except the unemployed. You know, I looked at that press release on Sunday morning. It never occurred to me that the unemployed weren't in that. It didn't leap out at me. When I first heard, you could have knocked me over with a feather. You know, as Australians, we're better than this. I'm old and I'm grumpy and I'm a big believer in budget repair. But budgets need to do two things. They need to fight for our future prosperity, the size of the pie, but they need to slice that pie up fairly. And we do have a stunning fairness fail when it comes to the money that we give the unemployed, falling further and further behind the living standards of ordinary Australians.
Finally, the big tax package to both mums and dads and also to small businesses. How stimulatory do you think it will be, particularly when we've got problems like the property market as well pushing in the other direction?
Look, it's big bucks. It's the equivalent, essentially, of 2 interest rates coming from the Reserve Bank and coming pretty fast, essentially July, September. And why I say July and September, it's coming in tax refunds. The average Australian has not given this credit, has not thought about it, because they don't listen to politicians, and if they do, they don't believe them. But they should believe this. Both sides of politics are going to do it. We're now quibbling as to how, you know, will Labor see that what the government's just done? Will it raise what the government's just done. Either way, it is a spectacular helicoptering of more than $8 billion into the Australian economy in a short period of time. And so, yes, ma'am.
All right, Chris Richardson, I will be very interested to see how that works its way through. Thanks so much.
Thanks, Ticky.
All right, after the break, we'll get the industry reaction to yesterday's budget with Your Money's chief business reporter, Leo Shanahan, and we'll get across what small business measures mean for the SME sector with MYOB CEO Tim Reed. Welcome back, and moving to industry reaction now. AI Group has welcomed the stimulus in the federal budget, saying it's a much needed boost for a slowing economy at a time of wavering business and household confidence. For more, Leo Shanahan spoke with AI Group CEO Willox a little earlier.
Willox, thanks for joining us.
Thanks, Leo.
Now, I want your initial reaction to last night's budget. It's got to be good to be back in surplus.
It sure is, and it's very positive. So there's some really good takeouts from the budget. Back in surplus, albeit skinny surpluses, but it's better to be in a surplus than not, so that's positive. The tax cuts, the measures for business around instant asset write-off, all very positive. The focus on skills we like. So directionally, it's positive. It's an election document as much as an economic one, but at least it set the tone for a good debate over the next 6 or 7 weeks.
Now, of course, the other big story from this is the tax cuts, or these new offsets, more than doubled now. Is that a good way to stimulate what a concerning economy, some would say?
Well, the economy is slowing, Leo, there's no doubt about it, and we have some data out this morning, our Performance of Services Index, which covers transport, logistics, restaurants, recreational activity, the like, good lead indicators in contraction again, 3rd month in a row. That's telling us that people are spending less, putting money in their pockets. So you've got to get the money flowing, and the tax cuts are a good way of doing it. It's more sustainable than unsustainable wage rises, and that's what the other alternative that's been put forward by unions are. We've always said tax and transfers is a better way to do it, and that's what this budget has done, and flattening out the tax structures going forward has got to be positive. So big parts of the public paying 30% tax, that's more like it.
Yeah, we'd have to wait 4 years before we get to that flattening tax structure.
But still, it's there, it's the objective.
And now, look, as you mentioned, the extension of, or the deepening of the business write-offs to $30,000 and to companies worth up to $50 million, which I think is the really interesting change in that.
Yeah. Well, it's a significant change, and we've seen before when the government has introduced these measures, very small at first, going back 3 or 4 years, and now building it up. Business does take advantage of it because it allows them to make investments in themselves that they perhaps wouldn't ordinarily make, and that just gets their supply chains moving as well. So it's good for the economy as a whole, not just for individual businesses, but for the businesses right through the supply chain. So it's a positive, and it's a really good step.
Now, infrastructure, obviously almost $100 billion in this budget for infrastructure. Do you think that is good targeted spending? Are you concerned about perhaps excessive projects that are frankly pork barrelling in an election year?
Well, look, most of the projects are good, and they're worked on federal-state relationships, and that being worked through, so they're positive. The question we have around infrastructure is who's going to build it all. We already have capacity constraints showing up through the work that's already being done, particularly in Melbourne and Sydney. Contractors not bidding for work because they just don't have the staff. And we have a whole lot more projects to be rolled out. Who's going to build it? And that might just drive up costs. That's the one thing we'd look at there. But these projects are good because they do keep the economy moving.
Yeah, I know that cutting immigration rates concerns you as well, but as well, today you had your PSI report released. Can we speak to that a bit briefly?
Well, what it's showing is that the economy is in a slowdown mode. It's not as a whole contracting, but big parts of the economy are slowing. Very clear to see that, and we've saw that earlier this week with manufacturing just being on the cusp of contraction and expansion. And we see the construction index we do as another lead indicator also coming out on later this week, but that has now been in contraction now for a long time. So what we're seeing is sort of an imbalance occurring within the economy, and consumers and business consumers as well being more reluctant to spend, and that is impacting on the economy as a whole. So when you have these lead indicators showing up in contraction, it tells us that we do need stimulus to keep unemployment low at about 5% and to keep the economy moving, and that's what this budget has essentially done. So that's why we give it a tick on the whole.
All right, well, Ines Willox, thanks so much for joining us.
Well, let's focus a little more on smaller businesses now and for industry reaction to last night's SME measures. I'm pleased to welcome the CEO of MYOB, Tim Reed. He joins me live from Canberra, where he's been for the last day or so. Tim, nice to see you there. I can talk to you, of course, about big and small, so let's go big picture first. Overall for business, how would you rate this budget?
I would rate this budget very highly. Firstly, I think the return to surplus will build confidence in business. You know, business needs to be confident in where the economy is going to invest, and there is no doubt that there's concerns when we run continuous deficits, and so that's a tick. Number two, the personal tax cuts, while they obviously don't go into the pockets of businesses, what they do go is into the pockets of consumers. You know, and Chris Richardson was talking about that a few minutes ago on the program, and so that is going to be helpful. I think from the small business perspective, you then add in the increase in the instant asset write-offs, and it's really now a small and medium size benefit that is flowing through, then that will also help. And finally, infrastructure. To the point that Ines was just making, having a pipeline of infrastructure means that people are confident that there will be ongoing activity, particularly in that construction sector, and that helps because there's many flow-on impacts in supply chain and in local businesses. And you know, the government has a 30% procurement requirement for these projects to go to local small businesses, and so that will build confidence as well. So it was a really strong budget.
Yeah. Do you think this will be a very popular move amongst small business, this instant asset write-off increase? I mean, obviously, it seems to have worked in the US, both in terms of its popularity and to stimulate the economy.
Look, it is popular, and we know that. Our research says that it is one of the most popular things that the government can do for small business. So absolutely, we are confident on that. It clearly works because they keep renewing it every year. It's, you know, it's been around for a decade now, and it keeps getting renewed each year. So I wish that someone would just have the courage to take the extra step and make it permanent, because I think that would increase confidence again and allow businesses to plan a little bit more for some of these larger asset investments. But absolutely it works, and it will be leveraged.
Clearly, the small business community is hugely important in this election, and yes, this is very much pitched, I think, in that light. Do you think now that we've got this pretty much return to surplus, plus this instant asset write-off out there, do you think that'll make a difference to the popularity of the government, or do you think people will say, oh, well, actually, we've got this surplus now, it'll be just fine under Labor as well?
Yeah, look, I mean, what I would love to see is Labor respond saying that they're also going to commit to 10 years of surpluses, and that they will also commit to zero net debt, because I think that would really allow confidence to flow into the small business community. I'd also like them to commit to the personal tax cuts, and I'd like them to commit to the increase in the instant asset write-off, because again, they bring certainty and they show that there's bipartisan support for those policies to drive small business. Yeah. I do think that there will be one big difference between the two parties going into the election, and that is dependent on what the opposition does around this concept of the living wage. Because by moving the minimum wage to 60% of the median wage, and that's how this sort of proposal for the living wage coming out of the ACTU has been pitched, that will squarely hit small businesses. You know, larger businesses have enterprise bargaining agreements, and tend not to pay, therefore, on the minimum wage. But that will hit small business, and I think that will become perhaps one of the biggest points of difference between the two parties going into the election.
The backdrop to this, of course, is after Kenneth Hayne, and one of the negative outcomes of Hayne has been, we're hearing, this reluctance, particularly of the big banks, to lend to small business. Are we seeing among your members real concerns about this credit squeeze, and was there anything in the budget that was going to address this?
So yes, we are seeing that concern, and it is a real concern. I will say it was a predictable concern as well, one that we were saying throughout the Royal Commission that that we needed to all be very careful about this. The good news is, on the one hand, Justice Hayne didn't put any extra requirements here. The bad news is, because there's greyness right now, banks are they're treading very, very carefully, and therefore are not engaging and making loans at the same rate that they were previously, because it's seen as being riskier in this regulatory environment. Last night in the budget, and it was actually announced last November, the government did commit $2 billion to what was called a securitisation fund.
What is that?
That's effectively a pool of money that they're going to be providing to smaller financiers of small business. So it's not going to go to the big four banks, but it will go to other businesses, fintech businesses that are creating lending products to small business. And effectively it will lower those businesses' cost of funds so that they can provide it to small business at a cheaper rate. Now that's a great initiative. I think that this is an area where it is ripe for innovation, and it's ripe for fintechs to come in and think about the way in which data can be used to lower the cost of lending to small business. You know, if you can really build algorithms that understand the cadence of a small business, then you can lend to them with greater confidence. So I think that's a great initiative. Probably not enough is the honest answer, but at least it's one that's headed in the right direction. It's another initiative that I'd love to see bipartisan support for.
Yes, indeed. Now, are you worried, though, in the same way that, you know, we can talk about, say, South Australia and valleys of death, and, you know, you've got to keep the thing flowing. Are you worried that this is going to actually deliver a period of time before there's traction in terms of access to capital for small business, where you are going to get a real credit squeeze, and it's going to put a halt to the great, and you combine that with maybe a living wage and everything else, it really could actually stop business investment in a way that might damage the budget surplus, because it's very reliant on business investment.
Yes, I am worried about that, absolutely. And probably even less at the micro and small business end and more at those growing businesses, because I think the securitisation fund is likely to have a good impact on a $20,000 loan or a $50,000 loan. It's where you get a business that needs a couple of $1 million to really expand. And that's the area where I'm most concerned that the credit squeeze will absolutely mean that, that's just not available. Now, those businesses won't fail because of that, but they won't be investing, they won't be creating the jobs, they won't be seizing the opportunities that they otherwise may have. And that will lead to slower economic growth.
All right. Tim Reed, I cannot let you go without asking you about this breaking news today on your business, which is that you know, you're subject to this this bid by KKR, which has been reduced now down to 340, which I think the board is sort of recommending that you take. Manikay has come in, this hedge fund, and said no, 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 no. It's announced today, however, it's throwing in the towel, it would seem to me, and it's going to support, vote in favour of accepting KKR's bid. Does this mean this is likely the end of it all, and that's the way you're going? You're going to go off the boards?
Look, the process that we've entered, KKR approached the board, you know, the board negotiated with them, they went through due diligence, they've come back with a proposal which the board has advised shareholders they think is fair and reasonable in terms of an offer. Manikay had been quite public in questioning whether the board's analysis was the right one or not, and of course as a shareholder they're very welcome to do that, and the board will always open to anyone coming forward and making making an improved offer. Shareholders will be voting on the 17th of next month. Manuka are just one shareholder. They're the only shareholder who have publicly declared how they're going to vote. So we'll have to see how all of the other shareholders are voting. But the really great news, Ticky, is that through all of this, we are incredibly focused on our clients. At MYOB, we live to help other businesses succeed. And so all day, every day, that's what we're focusing on achieving.
But briefly, if you were a private company, would it be a lot easier? You wouldn't have all this pesky, constant having to report all the time. You might actually, you know, get even more done, Tim.
As you well know, Ticky, I spend a lot of time talking to business owners, and one of the things I say to them all is it's never easy to run a business. And so public or private, there are always challenges and there's always opportunities. And I think that will remain the case, and I hope it does. Yeah.
Well, good on you, Tim Reed. We'll be watching the deal with interest, but thank you so much for your insights tonight.
My pleasure.
After the break, is the economy as strong and as shock-resistant as the Treasurer claims? Michael Evert, Rabobank's head of financial markets research in the Asia-Pacific, will join me next. Yes, welcome back. Now, the US and China are reportedly close to penning a trade agreement as both governments attempt to end their protracted dispute, but negotiators are reportedly still haggling over how to implement and enforce the agreement. The two sides remain split on two key issues: the fate of existing US levies on Chinese goods and the terms of an enforcement mechanism. It comes as China's Vice Premier Liu He prepares to meet the US Trade Representative, Robert Lighthizer, on Wednesday night local time. If this week's round of discussions are successful, it could pave the way for a summit between Donald Trump and Xi Jinping. Well, budget figures last night showed that we'd get to a surplus next year, $7.1 billion, but that it will take until 2026 before the surplus gets into the government's own target zone of 1% of GDP. It means that this surplus over the next few years will be pretty sensitive, you'd have to say, to any downside on a number of assumptions, including international economic growth. Now, that's downgraded in the budget papers, international growth, but what's more, China's expansion is expected to drop below 6% by 2021. Well, joining me for his take on all of this is Rabobank's head of financial markets research Asia Pacific, Michael Evert, who's back in town. Perfect timing, Michael. Were you here for the whole budget?
I was.
Yeah. Do you have a take on it? You must do.
I do.
Yes, go on.
Well, when you're a Brit coming down to Australia, there are a lot of cultural similarities you see. Clearly, one of them you have is the political theatre around the budget, which is a bit like kabuki.
Well, you've got to give them a break. I mean, there's a big election happening a month away.
Absolutely, which obviously amplifies it. My take on it, a lot of silliness, because as you said, there's an election coming up. If you have a change of government, this whole budget doesn't exist. So we're getting excited about something that will be around for just a few weeks, possibly longer, depending on the election outcome.
Certainly the big reform elements to it do require, you know, the government to get in. I suppose that's what this dangling of the money is for mums and dads.
That's the political theatre. But the other thing that I would like to comment on is I do not understand, as an objective outsider, what this fascination is with running budget surpluses in Australia.
Oh, that's a bit controversial.
Well, exactly. I don't understand why it is, because it's positively Germanic. The cost of borrowing in Australia for the government continues to go lower and lower and lower.
Yes.
If you look at bond yields. And quite proudly, you know, the Treasurer is out there saying by 2030 we project that we won't have any government debt. We'll have absolutely zero.
Yes.
How are the financial markets going to work if you don't have a government yield curve?
Right. Well, I suppose in its defence, this debt has been going up and up, even under this government. They've trying to turn it around, but of course it's been going up and up and up as we've had these structural deficits, really. And now they're saying, look, we've got to bring it back down. It is too high. You can get debt too high, can't you?
You can, but you're nowhere near that. You're 2 decades away from that being the case. You see, at the same...
How do you rate what is too high in terms of debt?
Well, Japan has 240%.
So it compares to how bad everybody else is?
To an extent.
Really?
Certainly the cost of borrowing is part of it. If you have very high interest rates and you've got a lot of debt, you have a serious problem. While the cost of borrowing is going down and down and down, and you have an infrastructure shortfall, you have a productivity shortfall, you have all manner of different projects that everyone gets excited about when they're launched in the budget, like a road here, a railway there. Why aren't you doing more of it? Why obsess about having a surplus which may not exist of $7 billion?
Yes.
Take that $7 billion and have even more airports and railways and roads, because it's cheaper than ever to invest in your own future.
I love
your
ideas.
If you don't do it, it shows you absolutely have no confidence in your own country.
All right, well, the government completely disagrees with you, and they're attempting to pull this debt down as fast as they can. How do you think, though, how safe do you think these projected surpluses actually are? I mean, as I say, they're going at, in terms of percentage of GDP, after next year it's sort of 0.4, 0.8, 0.6, 0.8, you know, it's going to take a while. So
Sure.
they're not that big.
Sure.
How reliant are we on China?
Very reliant on China, and I would say one of the only reasons I'm relatively calm in my criticism about these projected surpluses is that they won't appear. So, you know, again, there are political...
And you think China will play its part in making that difficult to achieve, the surplus?
It will be one of many factors, but I don't think the government will be able to, any government will be able to stick to them, and I think they'll be doing the right thing not to stick to them, because the economy is going to need the support that fiscal spending can offer, and definitely China will play a part in that.
Yeah. What other things will play a part?
The housing market, if I can dare say that on Australian television. You know, clearly you can see a number of negative factors. At Rabobank, we're predicting a US recession in 2020. And that the Fed will be cutting interest rates. So if you have concerns over Europe and Brexit,
yes.
The US predicted to be in a recession, China definitely slowing, even the budget is showing that, the housing market not looking too healthy overall.
Well, I notice even in the budget papers it says that, you know, if there's a 10%, another 10% drop in the housing market, that'll hit GDP by 0.5%.
It will do, and that's a guess, of course, it could be worse.
Yeah.
So why, against that backdrop, that litany of risks which are building up, do you say, and we're going to project forward 10 years of surpluses and not have any government debt when you need to have it to support the economy? It would be far more sensible to say, in some scenarios we might do that, but we're prepared to be pragmatic and do the complete opposite if the economy needs it.
So where are we on this jolly old trade deal?
Well,
which I have to say you've called, I mean, you called it, didn't you, that it was going to happen, and it has happened. It's taking an awfully long time to resolve.
It is. I think we are closer to a face-saving deal at the moment, purely because the Chinese economy needs the fillip, and Xi Jinping would like to have that support, and Donald Trump seems to be obsessed with the S&P as if that is the broader measure of the US economy. But nonetheless, I have no optimism at all that anything that is agreed can be stuck to by both sides, and I'm quite confident that by 2020, once the next US presidential election is out of the way, all this will come back 10 times worse.
Really? Oh, well, and that'll, of course, again, impact us, presumably.
Exactly. So it's just the right time to cut government spending and tighten the budget, etc., etc.
OK, so you've got some sort of possible coming together and, you know, looking at some sort of trade agreement. Where would we be best putting our savings at the moment?
Well, as always, it depends on your risk profile and it depends on your timeline. You can still make a valid argument that if you've got 25 years worth of saving to do, just keep putting it in the equity market every month and eventually you'll be perfectly OK.
But you like US Treasuries, even though the yield curve is inverted.
I do, and I liked them when they were about 3.25%. I like them even more at 2.65%. I like them even more at 2%. I'll like them as the yield keeps going down.
Going down? Yeah. Right, OK. All right. Anywhere else?
Well, again, if you want to take a slightly riskier look at the world, I still think there's a lot of value in emerging markets, but only in certain emerging markets. I still am negative on China for the reasons I've stated in the past.
And South America, I mean, looking at the way support is drying up, Trump support drying up in certain countries in South America?
That's a little bit outside my geographical remit, to be honest.
Of course it is,
Asia Pacific being my region. But I like countries like Vietnam. I like the Philippines, I like Indonesia. I think all of them offer attractive opportunities, and India too.
And you are a Brit. I must ask you about Brexit, but because just to update everybody, once again, no agreement yesterday. So Theresa May, I think, is asking for yet a longer extension. But I understand senior members of the British cabinet are now open to the idea of a no deal. I mean, what would a no deal do we think? Well,
if I may paraphrase Winston Churchill, Brexit is a mystery wrapped in a riddle, inside an enigma, inside a cock-up. And no one's quite sure where we go from here, but I would say the risks of hard Brexit are much higher than the market is currently pricing for at the moment. I don't really see how Jeremy Corbyn, who actually wants to leave and has to pretend to stay, and Theresa May, who would actually like to stay and has to pretend to want to leave, can find an agreement that works for both of their parties.
Well, that's the next thing. She's going to go and talk to him and have a little chat, and they're sure to agree something.
Well, they may do. I'm not sure what they've got in common, but what will the Conservative Party do? And can Theresa May really strike a deal with Jeremy Corbyn that the vast majority of her own party rejects? Yes. And what's Europe going to say, looking at all this, as the UK turns up cap in hand and says, can we have another extension on our homework, please, sir? The dog ate the last one again. I'm not sure Europe has got the tolerance for this, to be honest.
Yeah. Finally, let me end where I sort of started with China. How do you see China this year?
Well, the first quarter is definitely better than where we have been for a while, because once again they've turned on the credit taps and they're borrowing ludicrous sums of money to keep everything afloat.
Yes.
But structurally, China is turning into Japan, and that's happening pretty fast. And the worse that the trade war pressure gets, the worse things get for China. So the outlook, the further you look out, is worse and worse.
Michael Evert, so interesting, as always, to get your views. Thanks very much for coming in. Well, after the break, we'll get all the gossip from yesterday's budget lock-up and aftermath with the Australian's margin call editor Will Glasgow next. Right, now before we wrap up tonight, we thought we might bring you in on some gossip from yesterday's budget lock-up. We've heard there's a new rat pack in town, the Treasurer's so-called Richie Rat Pack. For more, the Australian's margin call editor, Will Glasgow, joins me live from Canberra. Will, you have by far the best job on budget day, I've got to say, chasing all these various parties. Who is the Rat Pack?
The Richie Rat Pack. Well, yeah, who knew we had one? But yeah, as I discovered last night, and readers of The Australian learned this morning, yes, under Treasurer Josh Frydenberg, we do have a new Richie Rat Pack. It's his three rich buddies, Ryan Stokes, James Simon and Justin Hemmies, who the trio were all along to see their friend, the Treasurer, give his budget speech last night.
So Justin Hemmies is very much up in the rich list. Mr. Simons, he's Aussie John's son, is he?
He's his nephew. Yeah, he's the CEO of Aussie, the Aussie mortgage empire now. Yeah. And Justin just crowned or just made a billionaire in the list in the Australian, and then the richest of the lot, Ryan Stokes. Just ranked on the list with a fortune, or part of the Kerry Stokes fortune, worth more than $5 billion. So all up between them, about $7 billion of wealth.
Wow, just walking through the door there. And why were they there? Just to support the Treasurer?
Yeah, look, they're his friends. I mean, actually, they're not. Now, Ryan Stokes you see in Canberra quite a bit because of his father as a media mogul, has a lot to do there. Ryan's also the chair of the National Library here. Kerry's the chair of the War Memorial. So they're in Canberra a lot. Whereas, look, you don't see, I mean, I've never seen Justin Hemmies there before. He told me last night on his way in, that was his third time in Parliament House. His second time was also with James Simon and Ryan Stokes. The three of them were all in the audience when Josh Frydenberg in 2010 gave his first speech as the member for Kooyong. Now, that was news to me and news to a lot of people, but they are all friends. You know, Josh Frydenberg was a groomsman at Ryan's wedding a couple of years ago. You know, he goes along to the tennis, well, used to when Seven had the rights for that. So they hang out, but, you know, it was news to me and to most people, actually, just how tight these people are. And yeah, anyway, all along for the Treasurer's private function last night, and it didn't end there, actually. So, you know, you had that mighty trio, and then a source of mine who I was, you know, poking my nose into various parties and functions going on just before the speech came out, and a certain cabinet minister walked by and said, "You might want to go and have another look in Josh's function," and which I did straight away to see that none other than Solomon Lew was also in the function, the $2 billion man of retail. Yeah, also in the private Josh function, and then went into the House to watch the Treasurer's speech from the front row with his new wife, Rosa.
OK, now there was a flash of glittering blue in Parliament House.
There was indeed. That was Julie Bishop, who in previous years in this federal coalition, she's been the real budget party or budget night party staff for the Federal Coalition. She hosted this quite famous budget night drinks party in her Foreign Minister's office up until this year. But with the end of her time in Cabinet and time as the Foreign Minister, that party came to an end. So there was actually a lot of concern amongst myself, I'll have to admit, that there wouldn't be much glamour and excitement this year. But there was, look, I mean, Josh Frydenberg's indicated he's now the new Deputy Liberal Party leader, taking over from Julie Bishop. And I think the indication last night was we don't need to be too concerned for future. Well, should the coalition, you know, surprise us all and stay in power, or should they return, or when they return, I think we'll still see quite a bit of razzmatazz in future coalition federal budgets.
Yes, yes. So do we think that the leading lights in the Labour Party have big mates like this?
Well, look, I mean, it was only last week that Bill Shorten was along at Anthony Pratt's mansion, Raheen, in Melbourne, right? I mean, you know, and they drew a pretty good crowd. You had Harold Mitchell along. Now, you didn't have, you know, Bill Shorten's got quite good connections with particularly the Melbourne moneyed set. Now, as I've revealed in Margin Call 2 weeks ago, Lindsay Fox and Max Beck have both provided a venue for him to have his election night party at, or event at, out by in his electorate, out by Essendon Airport. So, you know, I mean, they're very pragmatic, rich people who have good relations with Bill Shorten. And then, yeah, you've got, you know, the wider Pratt network, Rafi Jaminda, you know, and the wider Pratt family. And look, I mean, the word from that Raheen room was people were very impressed. They thought that he spoke, you know, he sounded very prime ministerial. And look, I mean, also, they just thought they could smell a winner. And then,
well, exactly.
If there's something that brings along a good crowd and brings along money, it's success and power, because you know, they've got to work with the party of government.
And the party's got to work with them. Important to have friends in high places. Will Glasgow, thank you so much. Thanks.
Thanks for having me. Bye, bye.
And that's all for the show tonight. Tomorrow night, MLC CEO Jeff Lloyd. Thanks for your company.